What is going on, guys? Welcome back. Commentary for you. This is a difficult video. I've actually normally one take these things. This one's taken me a couple tries. But first and foremost, I am a Webull preferred influencer. Use the link down in the description. Deposit more than $100 before January 15th. They just extended it. You will receive 4 free shares valued at least $21. So it's literally money right back in your pocket. If you just sign up, you will get 2 free shares just for joining. Don't have to deposit a dime. I want to talk about my goals for 2020, and it's hard to reflect on. It's remorseful. There's some guilt in this because I know my best year was a lot of people's worst years, and most of that success comes from you guys supporting my channel, the fact that my job was really never in jeopardy outside of YouTube. I set a very realistic goal, I thought, of $10,000 in my Robinhood portfolio. You can see we doubled that. I'm up to 22. As far as the Webull portfolio, I set a goal of $500, and we darn near 5x'd it at 2473. So to know that my best years were some people's absolute bottom years is not the most fun thing to self-reflect on, right? But it's where we are. I want to go through the portfolio. We've added a lot of positions. I want to talk about those free shares because, to be honest with you, the free shares can be extremely beneficial to you. When you take a look at my number one performing stock, really, Kronos is right at the top, and they were one of the first free shares we got. They are a paint pigment developer. So this is something that you wouldn't think about. One of the first lessons I learned about investing is boring companies that don't really excite you, the way like Tesla excites you, boring companies do really well. They're going to last a long time. You're always going to need color in things that are painted, right? But no one thinks about what brings the color into the paint. That's what Cronus is there to do. Underneath them, Teradyne, again, free shares that we sold out of. We actually sold 2 of those shares to fund some ETF purchases we'll talk about in a moment. But again, boring company, semiconductors. But to me, and I've spoke many videos about this, semiconductor companies are going to be the future. With AI, it's just going to be where they're going. I wouldn't sell any more of this. However, selling them, we did fund purchase of QCLN, actually 2 shares, which is an ETF holding a lot of Tesla. As you can see, percentage-wise, it's actually done just as good, if not better, than Teradyne. So we've kind of won out there. Underneath that, when we started the portfolio, one of the things I'm also really intrigued in is the essentials, what you need to survive and live. Global Water, a little concerned about the way they're operating the company. They're paying out a little bit high of a price, but at this point, we're in at a decent price. We've been taking monthly payments. I'm not going to move on. NRO is a REIT, which is global exposure. They've done very well and again continue to pay us each month. Pebblebrook Hotel was a free share. Obviously, like most hotels, it has seen a bit of a struggle. It has continued to pay a small dividend, but still a dividend. We hope they can bounce back next year and start to pay out a little bit more. FDIS, more of a consumer discretionary fund, but still does hold a good bit of Tesla and Amazon. Has done very well for us, and our price point continues to grow. Beneath that, Stag is a REIT, commercial-based, warehouses, storage, things along those lines for company and supply chains. Very good stock, pays us monthly. Underneath them, Realty Income, more of a retail exposure. You think about your Dollar Generals, they are doing very well as paying us that monthly dividend. So we're seeing that monthly payment come in while we're growing in a lot of these places. Cisco was one of our first tech plays, bounced back well, just at $4, still pays us, not going to go anywhere. One of the new movements underneath is DYMD. They are a SPAC. They've actually yet to merge into Genius Sports Group. They are a sports data and technology provider. So to be honest with you, when you look at my channel, blends right into that sports betting ecosystem of going out and collecting data from sports, putting them into games, so to speak. Underneath that, LSCC, Lattice, they are, again, a semiconductor play. Underneath them, CVS, we bought at a really good price point, paying us the dividend. Healthcare stock, always something to look for, and CVS has a pure play of insurance, distribution, brick and mortar store, everything you could ask for. Gladstone Capital underneath them is a business development corporation, basically helps businesses when banks won't, and PTY is a growth and income fund, kind of, I would say, helps people get houses where normally the bank would not loan them money for houses. So both of those kind of give back just a little bit of a degree. Going forward, some other essential stocks, PPO. I like the idea of having things that people need, right? So when you look at PPL, you need the lights on in your house. You need a way to cook. PPL provides that. They actually just sold their entire UK branch to focus on the US, and that hurt their price. So we picked them up with a decent value in my opinion, and also they pay a dividend. Below them, Kroger, again, you talk about essentials, you have to have food, you have to have a place to go buy the food. We'll talk about where that food comes from in just a moment, but Kroger is a large grocer and really one of the only companies that takes on Amazon. New to the portfolio, Huntington Bank. I like the money that Huntington Bank has set aside, and I feel like they're positioned well as a small regional bank to go forward. Free share of Opera. They are a web browser we've never let go of. I've just kind of let them hang out, and they've done okay. It's interesting to have a small web browser in your portfolio. Beneath them, WP Carey, another REIT. They don't pay monthly like Realty Income, but they're right there. They're just a lesser quality REIT, in my opinion, only based on what they invest in. Realty Income basically goes into investment grade. When you look at WP Carey, they go a little bit beneath that, but have just as much, if not more, success and pay a higher dividend, although it's quarterly. We talked about getting food, land, one of our first purchases. Berries, nuts, fruits, vegetables, you need them. Although they don't pay the percentage we like and we're down a little bit, I don't see any problem with them. Gladstone Commercial, again, going with a commercial REIT because they pay a higher dividend than Realty Income. They're much smaller. I mean, on scale, it's not even comparison. But they have a couple Walgreens, which I would never buy into Walgreens. I want to buy into CVS. When you look at beneath them, Snapchat, free share, great company, love the ad revenue, but not something I would go out and buy. And then beneath that, Ligand Pharmaceutical is the one we most recently received. You guys can literally go pull these free shares the same way I am of, $50, $60, $70, $100 companies. And that's really what's helped this portfolio grow. When you look at what Ligand Pharma does, they basically create medication and then sell it off to other providers that can go distribute that. So my goal with that is very simple. I'm going to look at moving out of those positions, just like I did with Teradyne, those two shares, once a fair market value is met. I believe for me, that fair market value is going to be right around the $105, $110, and I want to at least move that, at least one share into ARKK or one of, the ARK investing platforms. I like ARKK the best because I just feel like it's in a position to disrupt. I've got about 4 shares in my Robinhood portfolio, which obviously accounts for a big uptake of that wealth. And I think in a smaller portfolio like this, when you look at obviously our comparison to the index fund, the S&P 500, we're doing relatively well. I mean, sure, we lagged at the beginning of the year, which was expected, and we've really outperformed, by 13%. On a small portfolio, you can't ask for much more than that. We're in a position right now to get a pretty good amount of money back, all things considered, from our initial $125 investment. Right, when you take that in consideration, I think right now we're set to maybe get $60, $70 a year back in dividends. So one good year and we'll easily see back our initial investment. And I've tried to stress to you guys from the onset of this, I'm a voice on a screen. You are an individual. You can go talk to family member, friend, neighbor, relative, coworker. Let them know how you're investing, what you're doing in the market. I don't know that I would be buying into the market right now at these all-time highs. In fact, like I said, I think I need to look at some positions to move out of, take those capital gains and let them sit and wait for the pullback. Pullback is going to happen at some point. It's just when. If I'd have bought the shares of whatever I wanted to buy 3 months ago, we'd probably be in a lot better shape. But I've been cognizant that the market seems rather disconnected from reality. And obviously, with that, getting back to the original point I made, what has been a very tough year for a lot of people will be a tough next year for a lot of people. A lot of businesses are going to struggle. We just went through Black Friday. We just went through the Christmas season. Those retailers are going to inflate their books because of these sales. A lot of these sales were on the backs of actually having people get checks from the government, stimulus payments. When that stops, there's going to be a real problem. And I think what's going to happen is you're going to have some smaller businesses that have to either close or be bought out. And that's going to prevent a lot of stocks from doing well. It's going to give a lot of opportunities, but it's also going to create a lot of challenges. I don't want to be on the challenge side of things. I want to be on the opportunity side of things, and you probably do as well. So, with that said, as I mentioned in the beginning, all thanks to you guys for the support you give me, my channel, my family, changing my life, literally changing my life. When you set goals and you 3 and 5x them, I don't know what else to describe that as. Inconceivable at the beginning of the year, and even less conceivable based on what took place. So don't think that I don't take it for granted. Don't think that I don't wake up every day appreciative for what you guys do. I appreciate you watching this video, and I will be back in a week with more commentary.